Good evening, all. Ira Epstein with your Spider ETF stock market wrap-up, and this wrap-up is for the evening as we're here now on Tuesday, the 9th of May, 2023. Well, the first meeting happened between President Biden, Mr. McCarthy, McConnell, Schumer. They were all there. And their aides were there. They met for an hour. I knew nothing would get done today. I told you that. They walked out, and as usual, the first words, they weren't as negative as they could have been. No, there wasn't really any headway made here. Going into the meeting, both McCarthy and Biden had said, nope, they are not in favor of an extension. Of course they're not. In a horse trade, you have to have something to give. So if I tell you I'm not giving that up, and you tell me you're not giving that up, and we can't make a deal, but we have to make a deal, then you both come to the table and you give up what you said you wouldn't give up. Sounds complicated, right? But it isn't. Is there a precedent? Let me see. How many extensions have we had? Roughly 100? 100. So you think this is the first rodeo that I've seen? I'm assuming you've seen them too. This is how this plays out. Use your head. Do you dare think a default takes place? Whoever causes it, there's an election next year. Whoever causes it, that would take down the Republican or the Democratic Party or both parties. Therefore, you have to avoid that. But you talk big, you carry the stick. Teddy Roosevelt, carry that big stick. And for those of you younger, your history, you should have learned about that. And you make the noise, but then you learn. I've got all that power, but that's what's called politics. Then you have to give in for whatever you have to do. I'm still of the opinion at the end of the day, an extension. I don't believe that they'll reach this quickly an agreement. They're all saying we want to reach an agreement. Would that be great? Of course it would be great. Is it going to happen? Well, it's the same bet to me that the Fed isn't going to raise in June by 25 basis points. There's always the chance. Now, what else is coming up? We get CPI first thing in the morning at 7:30. I'm focused on that core CPI. I feel that a number 5.455 is neutral. 5.3 looks to me like we're rolling to the downside. Is that enough for the Fed to maybe say, maybe we don't have to go the 25 basis points? You throw it. A 5 number for certain, I think, is going to give everybody the idea the Fed's not going to raise anything. You get the PPI numbers on Thursday. So remember that. You got big number, but tomorrow's a real big number. Anything 5.5, 5.6 or greater, I think just guarantees you go on another quarter point. So I've given myself where I think the sweet spot is. Doesn't mean I'm right, of course it doesn't, but at least I have a game plan that I look at. As we look at TLT, which is the 20-plus year Treasury bond ETF, you can see that you're adding yield back. The lower you go, that's what happens. You've got lower highs, lower lows. This is a bear market. The market failed, and I was wondering if it would fail here at the combination of the 100 and the 18. Something else is happening. Are you ready to see this? Watch the red number tomorrow. It could get underneath and finally get underneath the 200-week average of closes. That would be a very bearish situation, another crossover in that, and that can lead to a challenge very quickly of the lower Bollinger Band, where I would expect something of a bounce. Now, could you just slice through it quickly for a day or two? You could if you had a real powerful CPI that shows inflation isn't breaking at all. So that would be the only thing. Barring that, I'd look for rallies then back into the resistance to see what the market can do. In terms of momentum, you're oversold as can be. Any reading that is sitting here with a reading under 30 is oversold. You have an 18 reading, so it's oversold. When we get to Schwab, obviously whatever interest rates do negatively impact Schwab if they're going up. And the reason is, then the question is, how much money do people want out of that to go to higher yielding instruments? I mean, people are moving all over. Today I was listening, you can get for 17 weeks, 4.25%, 4.5%, 5% some places. So why would you gamble on the market? That's the problem, and that's what impacts that. Still bearish. When we come over here to UGA, all right, so as we take a look, you can see how the market has lost the embedded reading. When that happens, you often make a run to the key moving average. The main moving average would be the closest of the main ones. In this case, just so we'd be looking at it, that would be the 200-week average of closes, the gray. And I'd look for the resistance then at that spot. In Tesla, the market's made it back to the 18-day average, sort of stalling right here, trying to figure out what does it do next. I get it. Obviously, if Mr. Musk lowers prices again, this stuff all goes down one more time. Then we go to XLF, which is the financial part of the equation here. It's bearish. Lower highs, lower lows. You had a bounce off these lows. You could easily go right back down here. We have to see, obviously, how the CPI comes out and how markets extrapolate that in this. Industrial production, until the market gets over the highs of Monday, I think the pros are going to sell short into this, looking for prices to come back down here, especially if interest rates end up the wrong way. In other words, instead of inflation falling, it stays strong. That can't be friendly, that market in my head. When we come over to stocks, this is a bear market rally into the 18-day average of closes. Until you close over that 18-day average, you're in a resistance zone here. You can see where the support is, where you're going to take the market. In the home builders, you're knocking on the door of the highs again. You know how friendly I've been. What I keep reading is that while prices have come down, a third of the homes in America, according to the National Association of Realtors, have seen price declines now. That still says 2/3 haven't. You got to understand how to read the math with that. And they think that we're nearing the bottom of that because there's not a lot of supply on the market. And while we've seen mortgage rates come up, those that need a home, that's it. And the people that are in recently over a 2-year period, they're not looking to flip in and out because they'd have to pay more. Well, that means they're bidding on these homes and there's fewer of them. Keeps the value of the homes they think in certain areas up. Now, the areas that were on fire, California, Florida, Texas, and all, these are the areas you always look at to decline. Idaho, parts of that. You get what we call those sweet spots, and those homes are probably the ones that got valued up the most, and now they'll decline back. I'm waiting to see when it hits Florida. Having lived there for 15 years, while I did live in Chicago, I had homes in both. I know the real estate cycles. I bought on one of those. That's how I waited for a hurricane to get hit, and I came in and scooped up what I wanted to own and lived in beautiful South Beach for a long time. And then I discovered I was the oldest guy in the building, and it was time to leave. It's a true story. I'm not kidding you. Miami, though, is gorgeous. South Beach, I'm a little old for. When you take a look at GLD, higher lows, higher highs, you can see how the market fights here at the upper band, but I'm still bullish. I mean, I don't see anything that's hurting this, all right? Even if CPI falls a bit, doesn't mean it's going to crash. And the core CPI will be the sticky one to move, even if it drops more to give people encouragement. I don't think any of that's bearish on the gold market. Silver market is having trouble gaining against the gold right now. It's gone into a bit of a stall. Part of that's because copper market is stalling itself out. It didn't help today to see that China's export business, while it was up 8.5%, beating the estimate of 6%, the month before the exports were up 14.8%. So that's still a very large decline, and it takes its toll on what the market is doing. In BND, I'm not repeating TLT twice here. This is now gone from the bottom here into all these moving averages, and the Bollinger Band shot up and down. Not a trend market, just moving back and forth. Dollar in an uptrend, but I'm looking for stiff resistance now at the Bollinger Band and the 200-day average. I think there's going to be big problems with the market there. And FXE, I'm looking for support against the lower band to come in. So you put it all together, we see where the markets are going to carry you one way or the other. And I know a lot of you have been asking me, Ira, I have TradingView. It's a popular suite charting software. I'd like your indicators in it. How do you do it? We've built the suite for you. It's really simple. You end up signing up on our website. We go in. We have a master plan there. We type in your username, and when we do that, it pops into your suite of indicators, and away you go. The way we built it, you're going to use 2 of the slots. Typically, you get 5 slots on the basic versions of indicators you can use. So we're going to pair it with just 2 of those. One for the stochastics on the bottom. The other's going to have my outside day. It's going to have everything you see me teach here. So it's all built in for you. How do you find out more about it? Well, you go to our website, iraepstein.com, and under the word software on the top, you'll see the word software. You will then see trading view indicators, or you can move your cursor up here, give it a click, and you'll be able to do it that way by just clicking it, and away you go. Either way, I'm Ira Epstein. You have yourself a great day. I'll talk to you all first thing in the morning as we get to the CPI numbers. I can't wait to talk about them. They'll be in my morning view, so be ready for that. I'll be recording at about 8:15, and I'll have it, and I'll give you my opinion on what we've got. Take care.